Of late, there is tremendous interest among investors to invest in the unlisted stock space. Lots of people have been pouring a lot of their precious savings into investing into these unlisted stocks. Is that a good idea? Does it have grave risks? How does one make money by investing in unlisted stocks? Friends, that's what we're going to see in today's episode. But first up, what is unlisted stock? Unlisted stock simply means a company that is performing its economic activities, which is having its shares distributed reasonably widely, but is not yet listed in any stock markets. So, unlisted is any company which has issued shares to its members and its shareholders, and it's operating in the commercial space, commercial domain, but has not yet come with a public issue. So it is not listed in any stock exchange. As a result, it is not tradable. Now, what's the difference between a listed stock that forms part of any stock market and an unlisted stock? A listed stock, by its very name, means a company whose shares is available for buying and selling in the stock market. As a result of this feature, there is always a set of investors who are willing to buy it at a certain price and a set of investors who are willing to sell it. So there is always a two-way court of buy-sell happening. And because of this buy-sell activity, that stock gets liquidity, which means that as an investor in a listed stock, you can enter into the market and buy that stock at any given point in time, or sell it if you want to at any given point in time. So both the options are available to you. The marketplace, that is the stock market, determines the price of the stock. The demand-supply equation determines the price of the stock. But for an unlisted stock, it's very, very different. Because it is unlisted, and there is no regular buy-sell options available, the pricing is a lot more challenging. It remains a mystery how the price gets fixed. There is no market making in that space. And as a result, unlisted stocks are a lot more challenging to understand how they get priced. Second, because they are not listed, there are no ready buyers available at all times. So it's a good possibility that for unlisted stocks, you may not have easy liquidity or no liquidity at all. So these are the principal differences between listed and unlisted. Now let's look at the pros and cons of unlisted stocks. We know the listed space reasonably well, but let's look at the pros and cons of unlisted. First, the pro. The first advantage of an unlisted stock is that you're capturing the valuation of the company at a fairly early pace of its growth. Now we know that every company goes through various stages of its life before it travels and becomes a blue chip stock. Now when this journey happens, the price of the stock makes tremendous changes as it goes. Now the person who is investing in an unlisted stock probably gets it at the cheapest price because the company's performance is not yet proven. There are no public shareholders which are listed in nature. As a result, the pricing is the cheapest. So you get into the company at a very, very early stage, as a result of which you get the advantage of the pricing. Second up, now if you are in it in the long term, as far as you can make a multi-bagger. What do I mean by multi-bagger? There are companies, fundamentally good unlisted companies, that have delivered 7x, 5x, 10x of their investment value over a period of 7 to 10 years. So if you bought a stock worth 100 rupees, there's a good possibility at the end of the 10th year period or 7 years or 5 years, whenever it gets listed, it will offer you the liquidity at a significant multiple of what you invested. So these are all the pros of investing in an unlisted stock. Let's understand the con. The first disadvantage of investing in an unlisted stock, like I mentioned, is the price discovery. You have no idea what the price that is being quoted. Is it the fair price? Is it the real price? There's always the possibility that you're paying a very, very high price, which may later come back and incur a loss for you when they actually go out public. So that's a big, big question mark, not easy to find out, especially for an unlisted stock. Second, many unlisted stocks remain unlisted for the longest time. Many companies go through the journey, and especially if their performance is not great, they can never come public, and as a result, your investment remains dead or illiquid. If it doesn't come to the stock market and list, you cannot encash that investment. As a result, it's equivalent to a piece of paper that you're holding, if at all. Now in the electronic format, it's even worse. So there are lots and lots of history of investors who invested in companies that have never come public. As a result, they're waiting patiently for many, many decades without ever seeing the money at all. So it's a big risk in some form. Third, even if it does come out as an issue, let's say 3 years after you invested, the company comes out with an issue and it's a blockbuster issue, you see that the company is listed at a tremendous advantage to what you have kind of subscribed to. Even then, you cannot disinvest the stock at that point in time because you bought it as an unlisted stock. So you will be categorized along with the promoters, which means that you will need to hold it for 1 more year. So which kind of denies you the opportunity of encashing when the IPO happens. So you're most likely, your exit will come 1 year after IPO. And we know in many cases, 1 year after the IPO, the stock price isn't doing very great. So there are tremendous disadvantages or demerits in going in for unlisted securities as well. It is high risk product, which is not necessarily suited to all the people. It is definitely not a generic investment opportunity that everybody must look at. Who are the kind of investors who are best suited to invest in unlisted stocks? Check whether you fit this profile. Typically, a stock, like I said, makes the journey from being a very, very startup, early stage angel investing position to moving to a venture capital funding and then moving into a post venture capital funding phase to an IPO stage, and then over the next 5, 10, 15 years moving from an IPO to small cap, mid cap, and then eventually to a large cap when it gets transformed into a blue chip company, and thereafter you see the tremendous gains. Now in this journey that a particular stock makes over a period of time, the risk reward changes quite dramatically. Now at the point where one makes an angel investment, the risk is the highest, but the rewards are also tremendous. If you get it right, if you get the stock that you're buying to be a blue chip later on, you will laugh your way to the bank all the way. But if you get it wrong, you realize nothing. So similarly, as the journey goes on, the risk reward becomes lesser from an angel investing. So an unlisted stock will give you a very, very high risk, but will also give you a very, very high return as compared to a blue chip stock, where both the risk is already understood and the return is already understood as well. So if you're somebody who's willing to lose your principal amount but are keen to look at a high return, then unlisted stock is for you. Second, you have a large portfolio, you would like to dedicate 10-15% of your overall portfolio into taking a very, very high risk, and you're prepared to lose it all, then unlisted stock is for you. Third, you're somebody who is looking at really long term, 10-year plus, you don't mind waiting on that lines, but you're willing to take the risk and you have the appetite to take the risk, then unlisted stock is for you. If these conditions don't fulfill, and if the loss of principal investment that you make worries you or bothers you, then unlisted stock is not for you, my friend. Having said that, these are the 5 tips that one can follow even while investing in unlisted stock that can help you navigate better. The first one, there are lots of unlisted stocks. Even within the most blue chip companies, you have unlisted stock. For example, the Tata groups will have another 10, 15 unlisted stocks in it. The Reliance group have at least 4, 5 unlisted companies within it. Now, as an investor, if you are taking a bet on an unlisted Tata stock, it's more or less likely that it's not so much of a risk. The risk is still there that the listing may take its own sweet time, but it's unlikely that you're going to lose your principal amount. So that's the first one. So look at the pedigree of your unlisted stock. If that unlisted stock comes from a pedigree of an established business house, then I think it's a good idea to explore further. Second, look at the business, underlying business and the financials. There are lots of small and medium businesses which are churning away hundreds of crores in sales and profits, but yet have not come into the public domain. Now, these are solid businesses growing at least 15-20% year on year. But the mere fact that they are not listed means that their prices will be a little depressed. So these are good businesses to buy in and which you can encash post the IPO. So second is to look at the type of business model and the financials of this. Third, look at the promoter group. Who is the promoter? What is their standing in the marketplace, in the public domain? What do people say about it? So on and so forth. This is another indication. The quality of management is extremely important in making a call on investing in unlisted securities. Fourth, look at the price and inquire about the price that others have bought. Do your inquiries, do your checks and balances with other people. Now, if everybody is invested around the price at which you're investing and you have checked it in other markets as well, then more or less you're getting it right in some form. While it continues to be high risk, you're not paying an exorbitantly larger price than somebody else. So to that extent, you're protected in that sense. The last but not the least, check who are the anchor investors, because they tend to influence the listing process. So if you are buying into an unlisted company that already has a large investor there, that investor will eventually want to exit at some point in time, and he is going to be able to influence the management to go for a listing at the shortest possible time. So you have somebody you can ride on with rather than taking a blatant bet. Now, these are all the points by which one can kind of safely say that this would be a risk worth taking. Not that this completely negates the possibility that you will lose all your money, that's not the case. But to a certain extent, you can assure yourself that there is a method in the madness. As I mentioned, unlisted security investing is not for the faint-hearted. It is for that investor who is willing to write off his entire investment. But having said that, if you're willing to be prepared to wait and do these due diligence, these 5-point check that if you're able to manage, I'm sure your experience is going to be much better. But always remember to limit your investment to less than 10-15% of your overall portfolio, because otherwise the big risk can come back to bite you.